You were listening to chartingwealth.com for Tuesday, the 26th of January, 2016. Where are we going? Well, we can see on IYY, and I'll explain to those listening by audio, listening to our podcast. We have both a video and an audio. We'll start off with what's actually been going on. We have 7 down candles representing literally 14 days of massive down movement since the beginning of the year. The latest candle that we have shrunk as of throughout the course of the day. Again, it's a 2-day candle. It was much bigger than it is now because the market went down 2% after about a 2.5% or so rise on Friday. What ended up occurring as this candle closed its way out is we have actually seen the market start to close up. It did cross over and broke our 2-day trend line, but when we look intraday, that is on our 4-hour chart, which is of course a quarter the size of the 2-day chart, not a lot of math needed there. Well, what we see is the market really started hitting its high point back on the morning of the 22nd, and it really didn't go much higher and then started rolling back over. Now, it's not crossed over going down yet on the short chart, that is the 4-hour chart, but we are waiting to see if that happens. Was this just a dead cat bounce? May or may not be. We don't know yet. We don't have a crossing over going down. We do have the derivative oscillator losing some speed, and we do have the MACD coming closer to the signal line converging, but that has not occurred yet. So we are hopeful in being able to track where the market's going. You might say, why would anybody want the market to go down? Well, folks, if we know it's going to go down, we can make money on the market going down. Why? Because you can purchase an inverse fund or just stay out of the market until the down moves are over and then get safely back in. That's what's so beautiful about being able to read a stock chart and why we try to keep it so simple. So on the big chart, it's lost a little bit of speed on the derivative oscillator, and it looks like it could be converging a little bit on the big chart, but we don't have any crossover going up on the 2-day chart. In fact, we're expecting it to move back down again, but we will not act on that until the charts tell us that's happening. Again, it's not about what we think, it's about what the charts are doing. Okay, now let's move from IYY, which is total market fund that tracks the whole market, to a little bit smaller index, but still a lot of the volume of the market, and that's SPY. It represents the Standard & Poor 500. It also has 7 big down candles followed by a green up candle, a small green up candle that's doesn't even recover as to how much the market started going down on the 21st. This candle on the 25th. Now, when we look at that movement intraday on the 4-hour chart, and again, just so you know, both IYY, the total market, and the S&P 500 were both down, well, and the Qs, which represents the NASDAQ 100, they were all down about 1.5%. So we saw in the morning down movement, and then in the afternoon more down movement, sort of a spinning top, bit indecisive because we had up movement as well as down, not just down movement. We do have a filled red candle, which in the Hinki Ashi type of candlesticks that we are using here. You don't know about those? Look it up, H-E-I-N-K-E-N, Ashi, A-S-H-I. It's a special type of candlestick we use. You don't know what a candlestick is? First, look that up. We have some good training on the website at chartingwealth.com. Need to understand candlesticks and how to interpret them. They're not a be-all to end-all. Nothing is in the stock market, but putting it all together with experience is going to help make you someone who can actually read a chart, know what's going on, and you're not held captive by what you hear in the news. Derivative oscillators losing some of its speed. The MACD and the signal line are about the same distance apart, but we do see a rolling over, what appears to be a rolling over, could change tomorrow, on the 4-hour chart. Now we're going to again revert back to our 2-day chart, and we're going to take a look at the Qs. Qs had gone up significantly more than the 2-day chart on the S&P 500 or the total market. The Qs, a much bigger up move, but again down just as much over the course of the day. Got a top wick where The bulls were able to pull the market up, and the bears were able to pull the NASDAQ 100, the technology stocks, down. So where are we? Well, we do see that the MACD and the signal line are kinking and coming closer together. Derivative oscillators losing some of its speed, but no crossing yet at all. And what do we see when we look intraday? Look at the 4-hour chart, and again, we see a red doji. What does that mean? Indecision. Indecision is tending towards a move down, but at the same time, a doji always means indecision. The bulls have pulled it down just about as much as the bears have. Well, the bears have pulled it down just about as much as the bulls have pulled it up. In fact, it's a little bit higher, actually, that upper wick, showing that the bears were able to pull the market up more than the bulls were able to pull it down, but the bulls were able to pull all that movement back down too. Hence, we have a red doji. So pay attention to that. You want to know about dojis, D-O-J-I. Look that up also. And again, listen to our broadcast, our video on candlesticks. That'll help you out a lot because candlesticks are good to understand. Now, we don't have a crossover yet going down, but we do have some possibly hitting the head. It's been at about the same spot, heck, for 4 candles now. So again, keep an eye on that. It might be moving over, and if it does, if the Qs, the S&P 500, and the total market roll back over and match the down movement in the 2-day chart, man, you are good to go and entering into a virtual trade. The reason we say virtual trade, because we're not a stock calling service. We're not giving you advice on trading. We're hoping to educate you so that you can later, after you do this enough, gain enough knowledge and experience, make those decisions on your own. That's what it's all about, is you making your own decisions. We don't make those for you. Lastly, we are going to go to gold. Gold is in an up move, has been since the 16th of December. Slid sideways and down a little bit, then took off, sideways a little more around the 13th and the 15th, and then up again over the last 4 days or so. Gold was up for the day on Monday, the 25th, 1.02%. And what's exciting about that up movement is bingo. When we look at the 4-hour chart, it started to work again okay for us. Much better than it had been in December when it started sliding sideways and the MACD wasn't working. Crossed over going up on the 20th of January rather, and has continued to move up. We had some up movement in the morning, and then sort of sliding sideways, and then up movement over the course of the day on Monday, the 25th. It's good to see our MACD on the 4-hour chart that served us so well in the past starting to work again. Well, that is where we are, folks. We are looking to see if, of course, in gold, this 4-hour chart continues to work for us so that we can start trusting it again. And as far as the other charts go, the IYY, the total market, the SPY, S&P 500, and the QQQ, the NASDAQ 100, we're waiting to see if those markets are going to roll back over on our 4-hour chart, make the same direction again as the big chart so that you've got an entry point when you see a crossover going down on this 4-hour chart in the future, if indeed that happens. That's what we're looking for, and we're keyed up to find, so we can find a good entry point, jump in, and make money in an inverse trade on the way down. You might say an inverse trade. Check out the stock symbol QID. That is a double inverse. It goes up at about twice the rate that the Qs goes down. It's a short, so it's fascinating. If you've not gained that sophistication yet, it's easy to gain, again, doing your virtual trades. Go to any of the online brokerages, set yourself up a virtual account, put $1 million in there, become a virtual millionaire, then start practicing what we talk about. It only takes a few minutes every day, and it will be worth its weight potentially in gold. So get going. Don't give up. Keep practicing. Keep listening. Keep studying. The stuff that you devote your time and energy to, you will get better at. Think about all the things in the past that you started off and you really weren't good at. It could have been learning to play a musical instrument. It could have been a sport. It could have been whatever you studied. And the more you concentrated on it, the more you focused, the better you got. How do you get to Carnegie Hall? Practice. How do you become a millionaire? Practice. Learn this kind of stuff. Thank you so much for listening from chartingwealth.com.